Welcome to Jesus Before Money. My name's Corey. I'm just got a lot on my mind. Been gone for a while, but I got a new mic. You should be able to hear me better, I hope. And I really wanted to go over the bank sector. Okay, we're approaching earnings beginning next week, starting Monday, the 14th of July. And I'm a little concerned, right? Everyone has FOMO right now. Nvidia, $4 trillion market cap. Bitcoin, new all-time high. Stock market, not at a new all-time high, but pretty close. And, what I want to do is just, try to paint a picture for you of what I see and what maybe you should see. And especially if you're a boomer, just be cautious. Your whole savings and investment life, if your retirement's solely based on your IRA 401k, I just be cautious. Little red flag. I don't have a red flag, but this is my red flag, okay? And if you made it this far, please just give me a like. Leave a comment of a stock, a crypto, something you want me to do, and I will make a video just for you. But today we got a lot to cover, so I'm going to get going. We're going to start on what you see right now, the 10-year yield, which is very important. We're going to go through the SPX. Then we're going to cover the XLF, which is the spider financial sector of the SPY. And then we're going to go over Bank of America, Citi, JPM, Wells Fargo, Morgan Stanley, BlackRock, and American Express, right? All these are reporting this week. And I'm going to show you, after you see them, you might be like, wow, yeah, we might roll over here. So let's get started, all right? All right, it's going to be long, so maybe grab a biscuit, maybe a cup of tea. I don't know, whatever you're into. Just keep it clean. This is a Jesus channel, okay? Just kidding. I'm trying to keep it clean. But my first video, right? I don't know if everyone saw that, but the 10-year yield, been in this consolidating parallel channel for 40 years. This goes back on the bottom of the screen. You can't see it, but it's 1987 is where this peak was, okay? So almost 40 years. It popped out, broke out. Now it's been consolidating. The only thing I see here is, yes, this pattern is a little bit too slanted, right? So maybe it breaks to the downside. But in the short term, for this week, for the rest of this month, I forgot to mention, we have a lot of stuff coming out on Tuesday as well. I can't even see this. I got my computer in a weird spot. But we have a bunch of financial data. On Tuesday, not only do the bank stocks report, but we also have the CPI. All right, now, why I'm talking about the 10-year yield. The 10-year was consolidating. You saw the much larger picture, right? That was a weekly chart, so each time frame was a week. Now we're on a 4-hour. Okay? Now the 4-hour have been consolidating. We broke out. I think on Monday. Yeah, Monday we broke out. On Wednesday we retested the line. So now this is support. This became resistance. Now the sign is support. And now we've broken out and we're running. Right? So where are we going? Well, unless this double top holds resistance and we get a rejection, yeah, this kind of opens the door for a move up to this line, 4.7%. Now you may ask me, what does that matter? Well, there's an inverse relationship. Typically, there's an inverse relationship with interest rates. When interest rates go up, the stock market goes down. So just keep that in the back of your mind. We have broken out from a bullish consolidation pattern, retested, and now we're on our way up. So how far are we going to go? The furthest I see is going. Obviously, we'll get past this tip. We're going to have a lot of resistance here, and then ultimately probably to this trend line. Okay? That's just in the short term. And I'll just leave it there. Okay? Just look on the back. What are interest rates doing this week and the rest of this month? Okay? Interest rates are very important. Now the SPX. So weekly chart. I do have a bomb there. Okay? I know you're not supposed to say bomb on YouTube, but this is just an emoji bomb. Okay? And I'm going to go ahead and erase that. And I'm going to talk about this bomb. Now, for those that haven't seen this before, this is maybe a parallel. I don't have two bottoms here, right? But this is the COVID low. I'm on the COVID low. And then we have the the high here before the interest rate hiking cycle, and then our current highs before we collapse. So I really like that, right? Kind of gives us a target of where we might go. Now I'm going to switch to the daily chart. So each one of these is a day, and of course my computer's off. I'm going to just move it. Sorry about that. But anyway, I'm getting better. All right, you can just see that we have trend lines of death here on the SPX. This is the S&P 500 index, okay? We got this trend line, which has not been tagged yet. This trend line has tagged right here. This trend line also tagged right there, right? So I'm going to zoom in now. Tag, right? So where are we going? I mean, I can only imagine if we do stay up here, we're only going to go another couple percent before we get a rejection. And then next week, what is really interesting is that we've had all these lines of death, right? All these trend lines that we'd kind of been creeping up. That one, this one broke. I mean, to retest would be way out here. Maybe we get a retest of that trend line. But, you know, we've had others in here that are just suggesting that we're into a lot of resistance, okay? And when we get into a lot of resistance, we usually get a check back. And we have all these gaps to be filled. I mean, we got this nice gap and we got that big gap, you know? So we have a lot of gaps. And then the big trend line that Gareth Soloway pointed out on Friday was this here, and look where we're at, right? So literally this week, are we going to break this line and come down and retest the previous all-time high before the collapse? Or are we going to continue up? If we continue up, it's only a matter of time before we're going to come down and retest this high. This is what we need to watch, is this trend line. Draw that trend line in if you can and watch it. I mean, literally by Monday. The only thing with this is, see this pivot, this top, and this line both converge here on Monday. So that should be support for a little bounce. But if that breaks, watch out. Okay? Have that in your back of your mind. I know I've been saying that. Just no one knows when the time or the hour, but it's coming. And I'm going to get into more why I think it's coming right meow. Okay? So I hope you're eating that biscuit and drinking that coffee. XLF, this is the financial sector. Oh my gosh, there's another bomb. Bombs away. Bombs away. It's scary. Look at this parallel. Okay? And what's very interesting about this parallel is on Monday, we had a bunch of downgrades of last week. Lots of downgrades all of a sudden in the financial sector. And what's very interesting about that is that I need to come down just a hair because it was on a weekly chart to this daily chart. But right here is Tuesday the 3rd, Monday the 7th. So we run up to it. We float up into it over the holiday before July 4th, right? When all the money, all the IRA and 401k money's coming in, we float into it literally on Monday the 7th, the next full week of trading. Whoop! Downgrade. Downgrade and chopping down and sideways. For anybody that knows this pattern, this is a bear flag. Huh. Go back to the weekly. All right. So, Corey, you're telling me we just hit the top of this this goes 99. All right. Some people watching this might not even be that old. But anyway, back to 99. Ding, ding. Okay? You're telling me we just hit the top of this parallel. We got rejected on downgrades, and we're forming a bear flag heading into earnings. Yes, I am. Be careful. I think the rugs are about to be pulled hard. There's so much FOMO in this market. So many investors piling in. You know what institutions call us? Retail investors? Exit liquidity. They don't care about your IRA, 401ks, and retirement. They don't care about you. Be careful. So what else do you see, Corey? What else should you be concerned about? Yeah. Let's talk about Bank of America. Oh my God, there's another bomb. Bombs away. I'm going to get rid of the bomb. And I don't, not insinuating anything with the bombs, just that the charts. Okay, so what is this move? This is the financial crisis. Boom. And what's this? This is a bear flag. It's actually what we call a megaphone bear flag. It's getting wider, kind of like a megaphone, as it, cheerleader megaphone gets wider at the end. And this is just screaming that Bank of America is not healthy. Hasn't really put in this looks bullish, like it's recovering, but it's really not, right? And now this top here, right around $50, it's right into this top. Sure, it can run a little bit higher. If it ever got up here, I mean, you would short the heck out of it, but on earnings, I would look at $50, see if we can get above 50. If this gets rejected, that's just a very bearish sign, okay? Another one that really concerns me is Citi. And this is a big bomb. I mean, this is the biggest bomb that I'm going to show you tonight. It's even an upside down bomb. I mean, that's a bad bomb. I mean, that's not good. Look at this. This is a weekly chart. You see the week in the back? I don't always mention that, but this is the financial collapse. And since then, this is just bearish consolidation. Maybe it's forming a bottoming pattern, but still I see an M. So even if we came up into here, it would be an A, you'd get rejected, right? So if we have a financial crisis, and I remember reading something, or I saw something about regarding the banks, and they do these like stress tests, and Citi wasn't very good in the stress test. And some people were talking about how it could be the fall man in the next financial crisis, and this looks like it's a fall man. In fact, if you have your money with Citibank, you might want to reconsider. I mean, the chart is just screaming that it's in trouble. Very careful with Citi, okay? And so, Bank of America, big collapse, bear flag since the financial crisis. Citibank. The rest of the banks don't have this that I'm going to show you tonight. And all of these are reporting next week, okay? But I just think that's really important. All right, so up in the morning, JPM Tuesday morning is reporting, okay? This is another weekly chart. I did find this parallel here. And like you can see, I have this trend line, so I think we're in a major resistance, and it's already pulled back. But look at this. Look how interesting this is. I just love charting. I love it. I love Jesus, and I love charting. My two favorite hobbies. And my family, of course, but those are my two favorite things in the world outside of my family. Jesus first, my family, and then money last. All right, but you see this trend line? I mean, here, choppy, tags. And then, guess what? Oh, on Monday, if you can see that, July 7th, we get a rejection. And then now we're bear flagging. Interesting. I think JPM is going to come in. Maybe they push it up in the morning to gap fill and then it sells, but JPM's on watch for a fall, right? Wells Fargo is also reporting on Tuesday morning. Look at this trend line. This is also weekly. Tag. Look where we're at on all these charts. All these charts, right? XLF, look where we're at. This is the financial sector ETF. This is all of them together, right? And then look at JPM, right? Where we're at. Wells Fargo, where we're at. Okay? If these start selling next week with the CPI, so not only do we have banks reporting Tuesday morning, but now we have the CPI, Consumer Price Index, at 08:30 Eastern Time. Right when all these banks and CPI, Tuesday is going to be a very volatile day. Either up or down, but everything's suggesting me Tuesday is going to be a down day. Monday's probably going to be a float day, and then Tuesday, maybe the rug starts to get pulled. Okay. Morgan Stanley. I'm not sure when this reports, but look at Morgan Stanley. I know it's next week. I don't know if it's Tuesday or Wednesday, but look, this trend line, Morgan Stanley into major resistance. Okay. BlackRock. I tried finding a parallel. I mean, maybe if you come here and drag to the COVID low, I didn't really like it, but I don't know about this line. But much like, I'm going to switch to the daily chart. Much like that trend line I found on JPM. Yep. Kind of this type of trend line. BlackRock kind of has the same thing going on. And you could probably even extend it a little bit, right? But tag. Hey, let me extend it. Let's see. Does it? No, it doesn't go that far. That's why I didn't do that. Anyway, tag. Maybe we break through, right? Because it's BlackRock. But just letting you know, it's up there, right? It's at all-time highs. So in the sky. And then American Express, all-time highs, near all-time highs. Actually put in this little double top. The only thing I saw here is maybe this is a little bullish consolidation. It did get a rejection on Monday, right? But maybe we pop up to this parallel and then come down. So the only thing I want to get across from this video is we're into heavy resistance next week. And next week we have a lot of things coming out with the potential of increasing interest rates, the continuation of this trend, okay? The SPX, the S&P 500 possibly breaking. If it breaks this former trend line here with these all-time highs, if it breaks that and breaks this, that's going to be ugly, right? That's going to be a major sign that things aren't right. That all of this might have just been a dead cat bounce, a bear market rally before our next leg down. So be very, very cautious, okay? And with that, I will yield your time. I hope you have a good week. Please just like. I don't care if you subscribe, but like and leave a comment of whatever stock you want me to do some TA on. And if you want levels, maybe, to trade, I will try to give you some levels to watch. And just remember, this is not financial advice. I probably should have said that in the beginning. Please consult your financial advisor. Send your financial advisor this video. I guarantee you they don't know this stuff. Okay? And with that, God bless you and have a great week. Bye.